Hi everyone, this is a technical analysis on gold. Let's start with a fundamental overview first. Gold dropped briefly below a key support yesterday following the FMC decision, as the market perceived it as more hawkish than expected. Overall, apart from some slight tweaks, the Fed was in line with the market's expectations, and the market's reaction might have been an overreaction. There's lots of algo driven noise during such big events, so be careful of that. The data is what really matters now, as it will decide what the Fed is going to do. It will likely take just one soft CPI report in January to see the market reacting in a dovish way and seeing real yields falling and gold rallying. Now, on the daily chart, we can see that gold fell briefly below the 2600 support yesterday following the FMC decision, but eventually managed to erase some of those losses and rise above the key level. The buyers will likely pile in around these levels to target the 2721 resistance, while the sellers will look for another break below the 2600 support to increase the bearish bets into the next major trend line around the 2400 level. On the 4-hour chart, we can see that we are still trading inside this big range between the 2600 support and the 2721 resistance, with the 2660 zone as the mid level. There's not much else we can add here, as the buyers will target the 2660 zone first, while the sellers will look for a break below the 2600 support to gain more conviction for further downside. On the 1-hour chart, we can see that we have this minor downward trend line now defining the current bearish momentum. The sellers will likely lean on it to position for the break below the support, while the buyers will look for a break higher to increase the bullish bets into the 2660 zone. These red lines define the average daily range for today. For the upcoming catalysts, today we get the latest US jobless claims figures, while tomorrow we conclude the week with the US PCE data.